Most people think they're investing in AI, but the truth is they're investing in it the wrong way. They believe buying Nvidia, AMD, or Micron means they're positioned for the AI boom. And sure, those stocks have done well. But if you thought those gains were impressive, what comes next might completely change how you see this space. Because AI doesn't actually run on hype, headlines, or even chips. AI runs on power, and almost nobody is paying attention to that. Before we go any further, if you want content that actually simplifies investing and helps you think ahead instead of chasing trends, hit the subscribe button right now and turn on notifications. This is Stockora, and we focus on ideas that most investors realize too late. Trust me, staying till the end of this video will change how you think about AI completely. Here's the reality no one likes to admit. You can build the most advanced AI model in the world. You can design the fastest GPUs ever created. But if you don't have reliable electricity to power massive data centers, none of it matters. AI shuts down the moment the lights go out. Most people talk about AI like it's just software and silicon, but the real bottleneck isn't code or chips. It's electricity, grid access, and power capacity. And power infrastructure is not easy. It takes years. Permits, environmental approvals, grid connections, massive capital investment. You can't just decide today to add gigawatts of power next quarter. Meanwhile, AI demand is exploding right now. Cloud companies are desperate for more compute. Microsoft, Meta, and others are all saying the same thing on earnings calls. Demand is massive, but scaling is slow. Not because of lack of ideas, but because infrastructure can't keep up. This is where a powerful investment thesis comes in, known as follow the watts. Instead of betting on which AI model wins or which company has the best chatbot, this idea says something much smarter. Follow the electricity. Follow the companies that already secured power. Follow the businesses that own real infrastructure with real long-term contracts. I didn't create this idea myself. I read a deeply researched thesis from a site called followthewatts.com. No hype, no flashy marketing, just serious analysis. And after reading every word, one thing became clear. Most investors are positioned completely wrong for the next phase of AI. Think about the gold rush. The real winners weren't the miners. They were the ones selling the tools, the railroads, the infrastructure. AI is no different. The real winners may not be the companies building models, but the ones powering the machines. What makes this strategy different is that it's not built on stories or speculation. Most AI stocks are priced on growth narratives. These companies are built on contracts, predictable revenue, and assets that take years to replicate. Some of them secured power deals long before AI demand exploded, and now they're sitting on assets hyperscalers desperately need and can't easily replace. That time advantage is the moat. Not branding, not software, time. And that's why the market may still be mispricing this opportunity. Markets are great at reacting to headlines, but terrible at pricing slow-moving constraints. Power infrastructure doesn't trend on social media, but it quietly decides who can scale and who can't. Let's talk about the company's position to benefit. Applied Digital owns massive data center campuses with secured power and long-term hyperscaler contracts. Galaxy Digital Infrastructure has deep grid-connected capacity, especially in Texas, one of the most important energy markets in the US. Cipher Mining combines compute demand with power-secured growth and hyperscaler optionality. TeraWulf has transformed rapidly with Google as a strategic equity partner, moving power directly into compute. Riot Platforms has a huge Texas footprint and strong grid positioning with early compute contracts. Then there are adjacent players monetizing power through GPU cloud leasing and hyperscaler compute contracts, including one of the most talked about names recently, already scaling real revenue. Together, these companies represent roughly $80 to $85 billion in contracted infrastructure revenue. That's not speculation. That's real money tied to real demand. AI demand is accelerating, but power supply cannot scale at the same speed. That imbalance creates scarcity. Scarcity creates pricing power, and pricing power creates returns. But let's be honest, there are risks, execution delays, rising costs, regulatory approvals, counterparty risk, and even future technological shifts. If AI ever requires dramatically less power, the thesis weakens. That's unlikely, but it's possible. This is not a risk-free idea. That's why this thesis should be used as one input, not your entire strategy. Strong portfolios still rely on diversification and broad market exposure, but the edge comes from understanding structural bottlenecks before the crowd does. If you want to track this properly, don't just watch stock prices. Watch grid approvals, power capacity announcements, long-term contracts, and infrastructure milestones. These signals matter more than daily price moves. The beauty of this thesis is that it doesn't depend on which AI model wins. Google, OpenAI, Meta, Amazon, it doesn't matter. They all need power. They all need compute. They all rely on infrastructure. If this video is helping you think differently, hit the like button and share it with someone who still thinks AI is only about chips. And drop a comment telling me whether you agree that power is the real bottleneck. Engagement helps this channel grow, and I read every comment. Most people stop watching right before things start to click. If you're still here, you're ahead of the majority. Ideas like this reward patience, curiosity, and long-term thinking. AI isn't slowing down. Electricity demand isn't shrinking, and infrastructure scarcity isn't going away anytime soon. Companies that secured power early could quietly become some of the biggest winners of this cycle. Subscribe to Stockora for more content like this. We don't chase hype, we follow structure. And remember, the future of AI isn't just written in code, it's wired into the grid.